everybody. Welcome to Market Mavericks. We are back for a Thursday edition to dive into economic policy, the economic indicators and data, crypto, stocks, the stock market, yields, the dollar, gold, of course. We'll get into that as well. I'm joined by Scott Melker and Mike McGlone, and we are ready to deep dive into the action. So I think we start this has been a wild week, crazy earnings. We've seen a lot of downside in earnings, and then you had Meta and Microsoft kind of blow the doors off the plane, if you will, here. And then yesterday, the Federal Reserve came out and Jerome Powell basically said, hey, guys, we're not going to be cutting because we still don't think the inflation has fully settled in from the tariffs just yet. So I'm going to kick it over to you guys and tell me where we go from this. And I'm going to show my Fed Watch tool here so we can kind of get a gauge of this. But Mike, why don't you start? Talk to me about what the Fed said and what we should be taking from it.
The Fed said the obvious to me, and based on everyone versus his whole board, except for two dissenters, the first time in like 30 years, that it's not so much they said as what I heard, and that is you don't cut rates when stock markets are on a tear. Okay, that's me. That's what I said. When you're on record-setting highs, your inflation's above their target. That's basically it. Inflation's above their target. Economy's strong. There's no reason to cut rates. In fact, he even hinted he might have to hike rates. I love that. It's just that's a good sign from a good responsible Fed.
Do you think he's serious about hiking rates, or he's
no? But he
played Trump because Trump is going the opposite way. He's like, you know what, you're to push me that way. I'm gonna say, well, what about we'll raise it? You know,
it's also perfect. He knows he's gone in 9 months, and then it's how history is going to judge him. And I fully expect we are way overdue for a little volatility in this wonderful Trump bump in the markets and everything. And when we get that next recession and or a little bit of deflation, which always follows these kind of periods, people are going to look back at Powell and say, oh, he probably was right. So I think he's thinking legacy now, and he should be. And every chairman after him, just think about the next Fed chairman. Market will perceive them as a complete lackey, completely, because it'll be approved by Trump and a Republican-led Congress. It's going to tilt us over to a third world type situation, meaning we better be in a cutting rate environment then, meaning need to be cutting by then, or the market's going to say, oh, okay, well, all that premium that we got in the U.S. stock market and the independence of the Fed, what made America great, yeah, it's going to be a problem. So it's just a lose-lose right now for him to push back. And I think people like Besson are saying, by the way, Donald, there's no win here to push back. And that's why I think gold gets it. Gold and maybe Bitcoin too. Bitcoin's much more of a risk at. Gold gets every single time that Trump pushes back on Chairman Fed, the chairman. I think gold loves it. But I think also in terms of markets, everything you saw so far this week is basically on a scale of 1 to 10 is maybe a 1 or 2 compared to non-farm payroll tomorrow, which is a 10. Now, it might not matter as much, but it's a trigger for people to move. And it's also happening right at the end, the flip between July and August, the new month. And we all know, every single trader on the planet knows that we are going to get volatility. It always happens. This is volatility so low. The question is, where do you buy the dip? How long does it last? And what you do with it? And so far, I'll end with this. I want you to tilt on it. You mentioned this pre-program is, one of the best ways to put a high in a market is to have earnings beat and the market stop going up.
Yeah, absolutely. And Scott, I'm looking at the Fed Watch tool here. 60% now, 61% chance there's no cut in September. You don't think there was ever going to be a cut in September. And then we're really looking at one cut the entire rest of the year as being priced in at this point. But do you even think we'll get that? Or you have markets at all-time highs, jobs, assuming it's not going to be crazy weak. Is there a reason to cut even?
I think that Trump is effectively bullying Powell into doing nothing on principle beyond the fact that he should probably do nothing on data, right? So I think that this is not going the way that Trump anticipated. I think that what Trump is actually doing at this point is bullying Powell badly so that he can put in a favorable predecessor when Powell is gone and there'll be no pushback. Make Powell look so bad that anybody Trump puts in looks good. And I think that that's probably his tactic. That's a Fed Watch tool, almost as good as job data. When has this been right? Mike, we've been talking about this even before we started Market Mavericks and on Macro Monday, laughing at this. 2023, if I'm correct, there was a point where the Fed Watch tool and predictive markets were showing 85, 90% chances of cuts that never came all year. The recession that was going to come and the cuts that had to come, it's never right. There's no reason to cut. If jobs are good, if GDP is booming, as many will allude to, we can talk about whether that's tariffs, And if the stock market is sitting at all-time highs, I mean, do you just want inflation to absolutely fly? Because if you cut, inflation is going to fly. There's no other
Right. And that, I think
way it goes.
that's been one of my points is that, when we had the last move up in inflation that went to 9%, we started from a baseline of what, 1%. And
Yeah.
here we're starting from, let's say, 3, and we start cutting now. Where
Yeah.
does that inflation numbers
And
go? And the
Mike,
other
you
part,
always, sorry, go
yep.
ahead.
No, you go.
I was gonna say, Mike, you say that gold always sniffs it out. Well, we also had the bond market sniff out when we did get a pivot, right? I mean, we got rate cuts and interest rates go up. I would bet if they cut rates in September, we would see interest rates go up again.
Well, that's the key thing that I enjoyed hearing some of the complaining from some of the legislators and Elizabeth Warren. Oh, Fed's got to cut rates to reduce mortgage rates. Okay, that's a good way to increase mortgage rates. It's the Fed's got to do what the Fed thinks is right to do. Get out of the way, let them do what's right. And typically they're behind. You're right. They were behind when they started hiking rates in 2022, way far behind by a year. But now we're in that situation where we have the number one thing that matters for all the economy, everything that people need to understand is the stock market. When you get to 2 times GDP, there's only 2 times in history, 1929 US, 1989 Japan. That's all that matters. And that's why I like to point out is the Fed knows it, and they got to be careful. And that's the number one way that Mr. Trump's going to get bond yields to go down, and maybe energy prices to go down, and in mortgage rates to go down by the time he gets to midterms. If he gets the stock market down a little bit, not too much, that hurts the top 10% of the population, not the 55% or so who below that who don't, who vote for him. That is what will be beneficial. But I think the key thing to remember here is that's all that matters. The stock market keeps going up. There's no reason for the Fed to ease. In fact, they should hike. And one of the key leading indicators for all this is cryptos.
Yeah. No, I agree with that. And I think that's one of the interesting points, just flipping over to some cryptos, is we've actually started to see some pullbacks in the altcoin market, but for the most part there, it's hanging in there. And so, potentially the stock market is still basically at all-time highs minus today. But again, Scott, in terms of the altcoin season, I know you've kind of said, hey, listen, that's like secondary. It's all about Bitcoin, but give us a little picture of what's going on. Like Ethereum's chart, it's holding up pretty well, I would think. Like, you think that can go higher?
Ethereum looks great. So, I mean, if you take a look at my chart of Ethereum here, there's Ethereum versus Bitcoin, which I think is what really matters, right? And I mean, you can take a look. I mean, this is one of the most heinous downtrends that you can see on one asset versus another. I mean, just literally like a rounding top all the way back to what looked like was heading to zero. But now you have the first higher high in that sequence since literally, I mean, we're looking at 2021. Right. And you've got a break above the 50 MA on the weekly for the first time really since 2022. And we're seeing continuation. And we saw a really nice retest last week. I think Ethereum, from a charting perspective, looked like it's ready to outperform. And I think that would buoy some altcoins if we continue to see this movement. To me, Bitcoin looks very stuck. That's not a bad thing. It's the middle of the summer. It made an all-time high. If you trade crypto markets and you've watched past cycles, you want Bitcoin to go up to an all-time high and freeze for a couple months, right? So that people get bored of Bitcoin and can flow into altcoins. But it's no mystery that Ethereum is doing what it is. It was way oversold. It was irrationally beaten down. It had the narrative that it was going to zero. And then you have Thomas Lee come in and do his best Ethereum Michael Saylor impression and pump the entire Ethereum market. And this is what you get up with. So as Eric Balchunas said this on my show this morning, he said, we have 19 days of Ethereum ETF inflows in a row. That's a record. They've outperformed the Bitcoin spot ETFs, which is astounding. He said if the Bitcoin spot ETFs never existed, which you can't say, the Ethereum ETFs would be the most successful ETFs in history and the fastest to 10 billion. So yes, they've been overshadowed by Bitcoin, but these are still incredibly popular products on Wall Street. But as he said, this is like, it's 13% or something of the crypto ETF market. He doesn't see it going higher than 20. So this is really, it's a mean reversion trade. Ethereum was so beaten down, it's just catching up.
Amazing. Yes. One of the things that I've been kind of noticing, and this is just so unique to me, is that Bitcoin, I guess it has a history of staying in ranges, but let me just bring up the Bitcoin chart here. But it has for 17 days stayed in a basic $3,000 range here. And that's, I mean, obviously it's had pierces of this zone, but I mean, that's incredible. I mean, for percentage terms, Bitcoin, I don't know if historically has ever stayed in such a tight range for, again, basically now almost 3 weeks straight. So again, you can look at that as okay, well, the stock market's been grinding higher, but this isn't. That could be the bearish case. But at the same time, you could also say, hey, listen, it's digesting the recent moves up, which is actually bullish consolidation.
So it's hard to argue that Bitcoin is not a bull flag. It's a bull flag for, like you mentioned, 17 days. But you look at gold, it's a bull flag for 4 months now. And the key thing to mention also is based on what you're saying about alts and Ethereum, Scott, is the stock market's making record highs. The Nasdaq's making record highs.
Right.
That's a prerequisite. It's always has been for Ethereum and alts to outperform Bitcoin. No, that's where we are. Guess what? Tomorrow starts August. This is the lowest volatility time of year. We kick in the high volatility next, and then it's about what's going to matter. So I'd like to tilt over, if I can, a little bit to a few things. Can I tilt over to copper a little bit?
Sure. Yeah. Copper was, I mean, that drop on copper was epic yesterday, and it's continuing today.
So that's the key thing. I look at copper as complete respect for you who trade and all our listeners and viewers who actually trade. I don't anymore, not allowed to. It's probably good. And I guess I'm a reformed ex-trader. I don't know. I think I probably would have lost money trading copper this year. I had a few good calls. To me, the key thing about copper is it put in a high this year very similar to what crude oil did in 2008. I was trading back then, made a lot of money, and then made a lot more when it worked, lost initially. But this is what copper did. It broke down. I like to just show you copper on the same scale as the S&P 500, just take it by 1,000, as government bond yields in China and the 10-year note yield. Now, copper just went right back to that 10-year note yield. It's on par. It looks like it. And the thing about copper, to always mean revert. So I think copper's on track to go back below 3, which has implications for, can it do that with the stock market going up? What's the key thing to make copper go down a little bit if the stock goes down? I just want to tilt over another thing too, is this is what happened with copper versus the LME. That spread was the highest ever. Typically, when you get things like this, you put in peaks that last for decades. That's what's happening in crude oil. Now, that much what I think is happening here. At the same time, what's happening? Iron ore is going down, signs of deflation in China. And also, these are bond yields in China heading lower. Again, on the same scale, heading lower. But also, I want to show you what's happening with gold. ETF holdings in gold have jumped up 10% this year. That's the most since 2020. It's on about the same scale, but it's after 4 years of outflow. It's a complete shift in sentiment. And I'll end with this one chart, and I want to tilt back a little bit. Is if you end the year now, on an annual basis, this is an annual chart. What I show you is gold in ounces divided by S&P 500. That cross at 0.52 is the highest in 10 years. Now, if we end the year here a little higher, what does that mean for the tilt going forward? That, to me, is where that big trade's coming in. It's where I'm looking at. As we start getting that little bit of volatility in the stock market, this is the time of year it usually picks up. Volatility picks up. You have a pretty significant trade coming on, and gold is actually, and versus the Bitcoin is actually beating Bitcoin, despite the fact that this year Bitcoin trades 3 times the volatility typically.
So let me just show, by the way, the move in gold on just on copper in just copper terms, because I think this is the biggest down move yesterday ever in copper in one single day. It was 20%. It's continuing today, but again, just look at this beautiful trend line from the peak here in September 2024 to the peak in March 2025, and then twice it kind of tried to push through, once here, and then all of a sudden the rug gets pulled. And this, again, for those of you out there that don't know, essentially, from what I understand, is that Trump came out and said, hey, he originally was going to put these massive tariffs on. They're much more minute in terms of what's being tariffed. It's not, I don't think, copper ore, it's specific copper products. And so essentially people can get around, or companies can get around, the tariffs, and therefore it's not that big of a deal. That's what I understand of it anyways. But the point being is that is a massive drop on copper. And, I was looking at this the previous couple days or weeks and saying, man, maybe inflation does start to bubble up. I mean, you look at some of these other things in recent, like live cattle. Again, this is getting into some of these commodities, but I mean, some of these charts have gone parabolic to the upside, really could be inflationary, but this really could bring down those pressures on the inflation side. And we've even seen palladium and platinum make some pretty big moves up, although those are correcting as well. And
Forgive my ignorance. I was going to ask you, finish your point. I'm sorry.
No. I was going to actually throw it to you and just say, the idea here is, which direction are we heading? Are we heading towards like the deflation, or like, part of me kind of agrees with Powell that, even though it was kind of this shock of these huge tariffs on Liberation Day, it then got walked back, but now they're kind of inching up. And I think with Europe, for instance, the average tariff before the 15% was agreed upon in this latest deal was like 1.2% or something like that. And now it's going to be 15. And so is it possible that inflation still is coming down the pike?
So let me point one thing about that chart. It's the lessons I've learned sometimes the hard way. Is what you point out. See the little double top that made a new high there at the end? I've been pointing out this copper premium CME versus LME for about a year, and everybody's on top of it. All the traders know it's never happened. People are trading it. But what did they do in that last night? You stopped out the last of those weak shorts. And then what does it do within a few days? Plunges. That's what markets do. They have to make it as difficult and hard as possible. But to me, it's also, in terms of the macro, I'll reiterate my base case for this year. I think this year is at risk of, is at high risk of a down year for the U.S. stock market. That is still, it's very profound to say that now, because that would mean a horrible end of the year, which would mean everything trickles down. I still see it's pointing there. I see those signs from gold. I see them from commodities. And to me, that's the key thing that's going to matter. We have to see signs of that not happening. So certainly by the time we can get through the next few months and see if it's not happening, we know we're due for a normal correction. But I want to tilt over to one key chart and emphasizes why I still have that base case view. This is an annual chart going back 100 years. So you just take the S&P 500 divided by GDP, just take out a few zeros, and you have the same thing as a Warren Buffett model. Right now, if we end the year here, it's the highest since 1929. S&P 500 versus, it's the GDP versus, it's the stock market cap versus GDP, the Warren Buffett model. At the same time, this is what I look at, is this is the gold divided by S&P 500. Looks like it's putting in a bottom, just like 1972. Gosh, I hope it's not the same. Hope it's different this time. Hopefully this turns back over. But that is what we're looking at into the next 6 months. This could be the biggest position trade of a lifetime. That's why I think that's for still the optionality. Now, if we end the year with the stock market up 5, 10, 15%, big deal. That's a big trade. If it happens,
I know,
just a little reversion in that.
So Scott, what are your views now on the economy? I mean, are we back to, the economy growing? Is there risk to the economy? What about inflation? Your thoughts on inflation?
I mean, I think if we cut, inflation is going to go up. So as much as I hate to become a Powell homer all of a sudden, I think he's doing the right thing. It's like, I'm a Bitcoiner. I've despised Powell and the Fed for as long as I've understood anything about the economy, but he's doing the right thing at the moment. And I think that right now we're pretty much frozen. I don't know that we'll get either if the Fed just pauses and lets markets sort of sort it out. But I think if they make a drastic move in either direction, then we will see. To be honest, I think that right now the Powell and Fed don't really matter. I think it's all about the debt and the fiscal situation. So I think it's a bit of misdirection regardless. I don't think Powell can control anything. But I think that we're more likely personally to get inflation than deflation. But that's mostly because we still don't know what's going to happen with tariffs. And I can tell you that a lot of people can argue that tariffs won't be inflationary, but I definitely can't argue that they will be deflationary. So I err towards inflation.
So let me piggyback on that a little bit. Go ahead.
No, I was just going to say, Scott, so we have obviously Jerome Powell's not going to be still in office or in his chairperson role come next May.
So hard next May.
Would you expect the new Fed chairman to do like a massive cut? I'm not talking like 3%, but do you think obviously, because again, then you have the midterms, right? So you got to if you want the economy to be doing well, you got to do probably like
I think it's going to go like 50, 50, 50, 50, right, into midterm, something crazy like that. I have no idea. We'll have to see what the economy looks like if it's a different environment. But Trump is only putting one kind of person into that job.
Do either of you guys think, and this is something that's crossed my mind, is that if you get that scenario, to me, long-term yields probably go up, right or wrong?
Well, it depends on how it happens. Remember, it's still 9 or 10 months from now. And if the Fed's already cutting in the process before the next chairman comes in, that's okay. If the stock market's going down, they're cutting, we're having this recession that's way overdue, that's okay. But if what you described is the Fed's not cutting, we put in a new chairman and just cut 100 basis points right away, just think of the legacy of this human being if things go wrong. That will never happen again if it turns bad. And then everybody after to say, okay, we made a mistake, we're not going to make that again. We let Trump push the wrong way. See the risk reward there? That's part of what's helping gold. But it's just, we got to wait. It's a long time to get there. If he found a way to fire Powell right now and put in a new chairman and cut rates, initially when it's the arbitrage in the markets. It's very rare for rates, the short rates to go up and long rates, I'm sorry, to go down and long rates to go up. I mean, that's happened. What happened, the first Fed cuts last year, but it's rare because of the arbitrage. I mean, this is the most arbitrage market in the market. And there's a lot of curve positions on it. Depends on what the market's doing. But the key thing that you pointed out, Scott, is if we cut rates like we did last year in an environment where risk assets are on a tear, that creates more inflation. Yeah, that's basically bad for inflation and bad for the long run.
Yeah. So I was just going to say the Fed watch tool is only predicting 2 cuts before Powell's out of office. Now we discussed that maybe that's total BS and could change a million times. But in theory, let's just say that happens. Does the new person come in and do a 50 basis point cut right off the bat? Scott says yes.
Well, exactly, but again, that's a lot of iterations to get there.
Right.
So we'll see. I mean, we'll see. But the key thing I want to talk about is and show you on a chart is we're talking about inflation and deflation. That's the key thing to remember in history. Deflation always follows severe inflation. That's clearly what's happening in China. 1.71 10-year note yield. I mean, I traded JGBs 30 years ago. I saw this before. Let's look at the most significant commodity, crude oil. This is an annual chart. I don't see what stops crude oil from going from 40. Scott, you've heard that from 2 years. Garrett, you too. I've been early, but the high year is 80, and it always has gone back to 40. One key thing that's happening. This is U.S. used to be net. Used to be net imports. Now we're in pretty significant net exports. We have massive superabundance come on. But the number one thing on the whole planet that matters is this chart here. This has never happened. This is the highest ever. This is the S&P 500 divided by the MSCI X US index. If that keeps going down, that will be the only trade that matters on the planet in all markets, everywhere. And that'll mean some pretty severe deflation on a global basis. The rest of the world's facing that deflation from China expanding their exports because they can't just export to the U.S. U.S. is seeing a bit of an inflationary issue right now, yes, but remember, 2/3 of our economy is services.
Scott, is there any catalysts in the crypto market that we're now waiting on? Like obviously we had the Genius Act. Like what's obviously if the markets go higher and people want to buy altcoins and this rotation, but that's the normal cycle. Like I guess the question is, what's the next big bill? What's the next big push?
I think we're numb to all of them because they've been happening on a daily basis. Things that would have absolutely blown the market out a year ago, even much less 2 or 3 years ago, happen on a daily basis, and we completely shrugged them off. I mean, Atkins just gave a speech unveiling Project Crypto, where he said that he's ordering the SEC to effectively look at tokenizing everything, every asset. I mean, the things that these guys are saying, whether it will happen or not, is absolutely beyond the imagination of even the most bullish person for crypto. We had the White House crypto report come out yesterday, reiterating a lot of the same, even though it didn't really talk about the strategic Bitcoin reserve. They said that the news that's coming on that is going to blow our minds. Bill Hines said something to that effect. Clarity Act got the most bipartisan support in the House of any bill literally in years. That's coming. I mean, every single day, it's a new thing. Oh, and I think it's probably worth mentioning that the SEC just dropped their listing standards for crypto ETFs, which nobody's even talking about because there's so many bullish things happening. They basically said if you have 6 months on Coinbase derivatives, that you can get an ETF approved for your asset. So you're talking about over a dozen assets right there that are going to default. And every time Coinbase adds an asset, 6 months later, you're going to get an ETF for that product. And you had JP Morgan Coinbase news yesterday, which is the craziest thing I've ever seen. You're going to be able to use a JP Morgan credit card to fund your Coinbase account. Terrible idea, by the way. But you'll actually be able to take your Chase points and transfer them to Coinbase to buy crypto. I mean, this is insane.
Let me not push back, but point out, we discussed this years ago. The tokenization of all assets is a matter of time. I just came from a futures environment. I remember decades ago, the people in New York complaining how futures were moving markets. This is a better way to transact. We all know tokenization is, but I don't understand is what about tokenization is bullish for an underlying crypto like Dogecoin or Shiba Inu, which trades billions of dollars and track nothing. To me, that's the point is, I see the thing is it's also making that whole space realize the value of the dollar. I mean, the world's not de-dollarizing. We saw what's happening in crypto dollars and stable coins. It's all going to the dollar through cryptos. And by the way, yeah, so to me, that's a key thing to think about here. But it's also proving that Bitcoin peer-to-peer cash was not true. I remember when I wrote that 5 years ago, how much pushback I got on my said it's not peer-to-peer cash, it's digital gold. It still is. The problem is it's very high volatility risk on digital gold versus gold, which is risk off. And to me, that's the key thing to think about here is we tokenize everything, put them on the chain, and everybody realizes, oh, there's a token tracking something with earnings, and I have to arbit versus that actual stock versus something else that has pumped up to worth billions of dollars and tracks nothing. It's going to be short bait for that kind of stuff. It's going to be a great trade, but things that most of those alts, 99% of them that are just BS, are going to go to zero. It's just a question of when the stock market backs up a little bit.
Gareth, I just wanted to show you my screen because it's exactly what he was saying. Tether announced their Q2 earnings. Tether issues 20 billion in USDT year to date, becomes one of the largest US debt holders with 127 billion in treasuries. Net profit $4.9 billion in Q2. Wow. They have like 30 employees or something, maybe 100, yeah. Whatever it is. It's like the most earnings per employee in the history of any company ever. But I mean, this is just crazy.
And Wall Street's jumping on, and Wall Street's going to harp it out.
To your point, yeah.
So just in terms of this tokenization, like I guess this is something just I don't understand necessarily. Like, does this mean I can tokenize anything? Could I, like, instead of taking verified investing public, could I just create a token and be like, hey, it's tied to my company's success? And then I wouldn't have to go through all the rigmarole.
There will be listed with the Clarity Act, presumably, and what the White House guidance, there will be a path to launching a token in the United States if you fulfill certain criteria. So the answer is yes, but there will be a offering in an asset class of its own that they define how you can do it. But you could definitely go to Malta and do that right now, or the Bahamas or something. But, but in the United States, I think it's still going to be a path, but they are making a clear path to be able to launch things.
Amazing. So here, before we end, because we're coming to the end, we've had a great discussion, but I wanted to show the dollar chart. So Mike, walk me through the recent strength of the dollar. Like, why is the dollar all of a sudden now up 2, 4, 6 days in a row? We were in such a dramatic downtrend since January, and now all of a sudden we're seeing it perk up. Does it last, number one? And why are we seeing this?
If the U.S. stock market keeps going up, and U.S. interest rates are high, the dollar is unstoppable. We've had a pretty significant correction. They say it was one of the worst periods, like first half since 1973. But for people fail to realize, it's been up so much. The dollar, overlaid with the U.S. stock market, divided by the rest of the world, has been the same trade since the bottom in 2009. So we're showing a little bit of divergence so far this year, but you've seen it in cryptos. I just like what's happening. It's not de-dollarization. It's actually the world grabbing on. I'm like, oh, for the first time in history, in my country, where I have tracked, normal currencies, I can get access to the dollar via stablecoin. So the world's going that way, thanks to Mr. Trump. Yes, they might speculate a little Bitcoin, but to me, that's what's happening. And now for the dollar to go down, I think it needs the number one thing that really pushed it up the last 15 years or so to go down, and that's the U.S. stock market. They're the same trade, just a little bit shift off this year.
So what you're saying is the dollar is actually getting more strength here, but then how does that fit in with the narrative that the whole idea of having Bitcoin is because the fiat currency is going to get printed to ad nauseum and de-dollarization?
It's from people who I think don't understand the big picture macro of economics. You would never want to spend gold or Bitcoin to buy a cup of coffee. That's just silly. But dollars, they depreciate over time. The key significance of is people who have a bias and want to push that bias always fail to mention that, by the way, you can get an income in that dollar. Right now, I'm earning 4% in my dollars. I don't know about you, but it's higher than almost every country in the world. If you have them in 10 units, you got 4.36%. In China, you're getting close to, one handles. In Germany, you're getting 2 handles. So that's the significance. There's interest rate attached to this. And also the key thing that they're pointing out is they're sucked into that past performance, pointing out that, what happens is inflation. The problem is, after you have significant periods of money printing, which we did, and inflation, you always get deflation. Look what Japan happened in Japan 30 years ago. Look what's happening in China now. It's just a matter of time in this country. People, I think, who are doing that trade have the wrong trade on. That, to me, is part of the reason that gold is keeping up with Bitcoin now. About the same for almost 4 years. I'm still sticking with the rock.
All right. Before we end this, guys, predictions for tomorrow's non-farm payrolls. Does anyone have a guess? Mike, you want to show what we're expecting, what the market is expecting here?
Yeah, I'm showing on my screen. Non-farm payrolls, the consensus is about 100 grand. percentage, 4.2%. Now that would, I think, be a bit matter because it was down last month, but that's the consensus. It's going to be the reversions, and it's going to be one of those things. It's one thing I want to point out is I don't think it's going to matter hardly at all. It's going to be what the market does, and what you're seeing today is if the numbers are somewhat neutral and the market starts heading lower, it's going to be that sense that, okay, we've reached a plateau. We're going to see more volatility in August.
So would the market go up tomorrow, the stock market I'm talking here, if we had a stronger number or weaker number? Like what does the market prefer at this point?
I have no clue. I'd like to see Scott's view on that. I just look at it, if the market's down tomorrow for any reason, it's going to continue down into most of August.
Okay. Scott, what about you? Any thoughts?
The market will do exactly the opposite of whatever I think the market's going to do. So
all right, well, then we really want to know what you think.
I think that, honestly, I think the market will continue up.
All right. All right. Very good, guys. Wonderful discussion today. Thank you guys for tuning in. Please follow these gentlemen. Their handles are at the bottom of the screen on X, and we will hopefully see you next Thursday for another episode of Market Mavericks. Take care.